gold is tricky. It's been going sideways, so I don't really have a lot to say, and I don't have a trade idea on the sheet today, which is not like me. Gold is definitely a market that I usually like. We're in a longer term sideways trend. We bounced off the moving average support down there, so it looks quite positive at the moment. Basically, we have to break above 2009, 2010. That would be the October high if we want to push up towards the all-time high, which is around 2070, 2072. Failure to beat the 2009, 2010 level leaves us with a very small double top. So that could trigger moves down to 1965, 1962, and maybe even a retest of the lower end of the recent range around 1933, 1930. We were buying down there, of course, a couple of weeks ago, and that worked really well. But not much else on gold. So let's go back to my trade ideas sheet here and look at what I am looking at. Oh, there you go. You might be able to see that a bit better. 109.00, 108.80 is my buy level. Now, I haven't actually checked this today since I wrote the report this morning. So let's just have a little look. The short-term bull trend is what I'm focused on because Euro US dollar is another one of those markets that's just been trading sideways. The dollar has been trading sideways for so long now. It does make life more difficult, but this short-term bull trend that we've been in since around the beginning of October is giving me 7 weeks or so worth of data that I can actually use. Where did we get down to today? The low is 108.80. I think that was within my buy level. Yeah, 109.00, 108.80, stop below 108.60. So that is actually so far working, or at least holding the level. I can't say there's much of a profit on the trade, but there you go. It looks like we're getting somewhere. I would put a second set of fibs on here, which I think is one reason why I picked that level. Yeah, the 109.00, 108.90 area was the support. I had thought that the 100-hour moving average might hold things, but now we're back above the 100-hour average. Maybe with a bit of luck, this long trade will start to work. I do have another buy level, and you can see why down at 108.50, 108.40, which is a bit tricky because obviously it's 10 pips below that stop. So, but the reason I've got that in is because I think that this is going to be a better buy level. We haven't had to test that. I didn't think there'd be too much downside, and that's why I picked that first level there. So far so good. Let's see what happens. I certainly would be more confident of the 108.50, 108.40 level holding if we do get down that. So Japanese yen, the other one, yen. Now my logic, and I've been talking about this a lot lately, so you've probably heard me talking about it, but I need to go to, here we go, the daily chart. Now, potential double top pattern, a nice big double top pattern because the dollar yen has been rallying for a very long time, decade actually, 2011. There you go. So it's over 2 decades old, this rally, and that would certainly be a huge double top. Now, we'd have to break below 127.26 for the double top to be confirmed, but that doesn't mean we can't have a gamble on it at the moment as we've just rejected the October 22 high. So the double top pattern is a year old, and it does look like, it certainly looks like it could be forming. Now, we broke below the 50-day moving average. That was a bit of a sell trigger. Yesterday, we had this candle with, like a hammer candle, with where we closed, we rallied swiftly from the low. I didn't expect that to happen, I'll be honest, but I thought this might give us an opportunity to take advantage of the bounce in what I think is a bear trend. So I had my level, which I took from my short-term charts. Now then, what did I have? The first sell level I had was 148.90, 149.10, stop above 149.40. And I think I've just got a bit lucky there. We overshot my level, not sure why, but we got to a high of 149.34, which means that I've got away with that trade. And look, we've reversed really quickly. We're now looking at a small profit actually on the trade. Let me just go back to remind myself, 148.90, yeah, 149.10. So already we're at least 20 or 30 or even 40 pips on side on that trade. So it's too late for you to jump in now if you're not already on the trade. But if we do bounce back to sort of the 149.00 area, maybe you want to try a short with a stop above today's high, 149.35, 149.40 should be enough. I think it's probably worth it because, as I say, in the longer term, there is a good chance that we have actually reversed. And the Bank of Japan only needed to talk about intervention. They didn't even need to actually intervene, but they do. And there is dollar weakness involved in this as well. It's not just yen strength. There is dollar weakness, of course, because we had some weak inflation numbers out. We've had some weak employment numbers out of the US, and there is a lot of speculation now that the US has finished raising rates. The Federal Reserve are being quite tough talking, still quite hawkish, but the market certainly seems to believe that it's most likely the Fed has probably finished raising rates. So seeing some dollar weakness. Anyway, as you can see, once we broke this trend line as well, that was at 150.00. If you follow me, I had a weekly close below 150.00 as a sell signal on Friday. And so we were lucky for the market to just nicely jump up to 149.99 on Monday to give us a chance to get into a short position. That was really nice. A downside target is 146.60. Looks like a reasonable target on the downside, doesn't it? Just from the 100-day moving average, but certainly the low 140 area could be a reasonable target if you're looking for a longer term swing trade. Okay. What else have I got on my trade sheet? I have got dollar CAD. So I'm a buyer of dollar CAD at quite a level, which I think we're getting close to. Let me remind myself of that level. 136.70. Yeah. We did get close yesterday. What did we get to? 136.78. Really close. It's not the strongest level I've ever seen. I'm taking it from two trend lines. This short-term trend line going back about 5 or 6 weeks, and a longer-term trend line, which has been really confusing, but I'm still have some hopes that we will hold it. Now, this got tricky and I gave up. Even this got tricky because we spiked down and then recovered. I'm hoping that this retest, the third retest, will be the one that we will bounce off the trend line and the 50-day moving average, the black line, and finally take off. But as I say, yesterday we bounced 7 pips above my level. So I'm going to have to sit and wait and see if we actually test it. If we break below that level, then I would take that as a sell signal. It would be sort of the third attempt to bounce off the trend line, and it would be a failed attempt. So we'll worry about that if it happens. And it will be tricky to tell because, of course, we have bounced the last 2 times when we dipped below the trend line. But on my trade sheet, I do have a break below 136.35 should be a sell signal. So I've given myself a bit of room. I think that's below the last low, 136. Yeah. There you go. As I say, tricky this one, but I don't want to miss this opportunity if this is a breakout, because this channel goes all the way back in a year, more than a year now. And so if it is a breakout, then it could be quite significant. Moving averages, 100 just crossed above the 200, just starting to turn up. 50s working as a support level. You know, with the moving averages, I think it's worth a try. Okay. Just okay, my chat box. Okay. Okay, close that. How do I close it? Close it. Okay. Aussie dollar. Aussie. Sorry, man. Trader's already triggered, but I'm going to show you why I chose it. And we may get a second chance to get in. This has been horrible, really tricky. We are in a bear trend, something of a bear trend when you look at it on longer term. When I scrunch the chart up for 7 years, and more recently, since the beginning of 2021, Aussie dollar is in a bear trend, but of course, we're getting some big rallies up within that. So I'm sort of isolating what I'm doing down to the last 11 months, just to 2023. This is the trend that I'm focused on the daily chart. And this is pretty horrible. If you were trying to trade, you couldn't run a trade for more than like 2 days, really. So it really was a scalper's market, get in, get out real quick. Now, another breakout, I believe, a tricky one, false breakout here. And then we broke and retested the trend line. We overran it, so that didn't work very well for me. What was my buy level? I had us in at 64.90, 64.70, stop below 64.45. So that was just enough room for us to manage to hold on to this trade. Now, I must admit, I gave myself more room than I thought I'd need, but in the end, it did work. We got a nice green candle, 2 green candles. We were up yesterday, but we pulled back when we hit the 200-day moving average. I don't think that's going to be a barrier for too long. I think the Aussie US will eventually push higher, but for now it's holding us back. So that's the key one. My target of 65.90, that was my first target, 65.90. We missed it by 1 pip, but I've got quite wide targets on this. My next target is 66.90, which is all the way up there, because look, having broken out of this channel, we've got to give it some room and hope it's got some legs. I don't want to be getting out of the first hurdle. If we do dip back down again, which I don't really expect, but we can't rule it out, then watch that 64.80 area, 64.90, 64.70. It should be a good support level again. And if it fails, well, that will be frustrating. And I won't really know what to do with it after that, because we'll probably just be stuck in that channel. Okay, the next trade I've got on the sheet is the cable, the pound versus the US dollar at 124.60. I think we've been down there today. No, we have not. I've probably got it all from the shorter term chart, actually. But again, we're recovering. Now, I thought this could be something of a bear flag, but we seem to be pushing higher now. So I put some trend lines on there. What do they tell me? Yeah, they tell me that we are breaking up. So, and we look, the cable, we've pushed up through the 500-day moving average, which the 500 and the 200 were really good resistance levels on the first bounce. But now we've pushed up through with that dollar weakness, really helping the pound. Up through the 5, up through the 2, up through the 100-day moving average, broken above this trend line. And you can see that the trend line, the moving average, and the Fibonacci levels are now all acting as support levels. So I probably should have my buy level in a little bit higher. I'm sort of just down here. But really, well, I certainly should have had it 25 to 90 today, because that's the, and I was just a little too low. I am 24.60. So outlook, I think, is positive for the pound versus the dollar in the short term, at least. We're getting a little bit overbought on the daily chart, as you can see down here, but that's nothing to worry about. We're only just starting to get overbought. That's it. As long as we hold above 124.90, that should work. Okay. Yeah, I'll have to look at revising my level up on there. A bit too conservative. What else have I got? A New Zealand dollar, Canadian dollar, 60.20, 60.10. Now, we've hit that level. We have indeed today. Look, nice little dip to 60.13. So that's just perfect. I had 60.20, 60.10. We made a low bang in the middle of that buy level. Can't say fair. Can't get more accurate than that, can I? What's my reasoning? Very simple. Hourly chart. I threw some fibs on. I had a bit of price action backing up the level. Not seriously, but I just thought I would go for the 23.6% fib, 100-hour moving average, and that's worked. Okay. Analysis on the 4-hour chart that I've used, but I'm not going to show you that right now. Again, I'm hoping that this is something of a recovery. I have it in my head that the dollar will stay soft just because of the data we've seen, and I think sentiment is turning. We've broken above this trend line. You know, again, it's not the strongest argument I've got, and it certainly is counter trend to be buying the New Zealand dollar versus the US, but it's a decent enough support, I think. And as long as we hold above the 100-day moving average, I think it's worth a gamble, and certainly has been so far today. On the bounce, if you get long, 60.86 was yesterday's high. That's just a few pips below the 200-day moving average. So that would be a reasonable first target. And it would also give us something like 70 pips profit. Not bad. Can't say no to 70 pips, especially in a week like this when we've got US Thanksgiving tomorrow. So, you know, it was expected to be a slow week. Tomorrow will be even slower, and so will Friday, as I'm sure you know. So we will need to break above 61.00 for the next leg higher. But I think it can happen. I just don't know when. Probably not this week. Although having said that, sometimes on these quiet days when you think nothing's going to happen, that's when you get the real big moves because the volume isn't there, and someone can really push it around with less size than normal. Okay. I'm going to blow that up a bit. Here we go. Okay, that was cable. That was New Zealand US dollar. So that one is kind of working, and I think I'm on the right side of the trend. Euro. Karen, thanks for joining us today. Arc trading philosophy. Okay, so my favorite setup I'm a trend follower. So primarily I'm looking for a nice little bull trend or a nice little bear trend that I can jump in. So if I see a bull trend, no matter how short term it is, it might only be something on the hourly chart, but I'll give it a go. And you just saw me do that on the New Zealand versus the US, and it seems to be working so far. So pretty soon, I'll try in to a bull trend at a support level, or not so easy is buying into a bull trend on a break above the previous high or a break above resistance, assuming that is going to trigger the next leg higher in the bull trend. So that is absolutely, it's in a nutshell what I do. I'll do the reverse in a bear trend, of course, and I'm happy to trade short positions. So if I see something that is trending down, I will try to sell a bounce or to a resistance level, or again, sell on a break below the support level or previous low, and hope that is going to trigger a new leg lower bear trend. Obviously, I do have to adapt to that, and I do have to try to trade sideways markets, and I've certainly had to do a lot of that lately. I don't have the luxury of just saying, well, I'm not going to throw out any signals today, because of course I've got subscribers who are relying on me. So I have to come up with something. Requires quite a lot of work because sideways trends are harder. And I will admit, I think I probably have more failed trades in a sideways market, but we do come out on top, to be fair. I think my subscribers would agree with me. We have the odd losing week, but even in sideways markets, we do win. We just win less because you can't hold on to the trades for so long. So even when you do get a winner, and I think my win rate is lower in a sideways trend, as I've said, but when you do get a winner, you can't run it as far. I'm looking at this Aussie trade, hoping I'm jumping in on the beginning of a bull trend, and I'm looking for up to 200 pips profit on that. Now, you're going to be lucky to get 60 pips profit on in a sideways trending market when you're just scalping. So that's why another reason why I like to focus on the trend, because it just makes life easier. If you get in to like I did just show you. Where is it? Now, I'm only isolating the short. I don't like looking at such a short-term trend. I've got no choice because there's too much trading sideways. And literally, this is a weak argument for a trade, I will admit. It's not, I would have at least wanted a decent trend line on there, and I don't have it. But anyway, so far it's working. So, with Thanksgiving and everything out this week, I said to my subscribers, I'm going to be looking for just quick trades, quick bounce off a support level. I can't afford to mess around and be trying to run things overnight. My main trading philosophy, I think that is in with my setup. I'm a trend follower. That's it, really. I look at 1 hour, 4 hour, daily chart, weekly chart. I look at trend lines, moving averages, Fibonacci levels, candle formations, which I'm just about to show you on my next example. And I trade patterns. And you can see all of that here. I'll trade a channel, I'll trade a triangle, I'll trade a double top, I'll trade a head and shoulders. We've got head and shoulders patterns, which if I've got time, I'll show you, that could be full. Trading consolidation. Okay, yeah. Do you know what? Every market is different. I can't just give you a 3-sentence answer to that. I'm looking for a pattern. I'm using my trend lines. The Fibonacci levels go out the window in a sideways market. They just don't really work very well. Even the moving averages don't work well because silver. So silver has been in one massive sideways market for such a long time. Look, this is the daily chart. So when the daily chart, the moving averages start flatlining and then converging, you know that that's been in a sideways trend for a long period of time, because it takes obviously a lot longer for the 500, the 200, the 100 day moving averages to slow down and start flatlining and then converging. That's what they always do. They always end up moving towards each other in a flat market. So they're just not much used to, they can be useful sometimes, but you can't rely on them like you normally can in a trending market. Fibonacci levels also tend to go out the window. So for me, it really is just trend lines. And then you've got to decide which time frame am I going to focus on for my trend lines. Which ones do I think will be reliable? This trend line, as you can see, is probably, I'm not trading silver at the moment. So I haven't really updated it. I'm not trading it because I haven't got a clue what to do with it, quite frankly. But that's probably an accurate trend line. So yeah, I try and avoid these, and I only suggest trades in these markets when I'm absolutely running out of ideas. Right, I was going at, what was my next trade idea? Euro. Right, EuroCAD. Now, this again, big sideways market. You don't, the moving averages again, as I said, that tell you the whole story. The 100-day moving average has been flatlining since the beginning of May. The green 500 has been flatlining for a lot longer. The red 200 has been flatlining since the beginning of September. And look, they're touching the 100 and the 200. So, longer term trend, there isn't one really. No, we've definitely been stuck in this sideways range since December. So for almost a year. Why am I interested in this market then? There's absolutely nothing going on. Well, we have a bearish engulfing candle. We've had a really good run up since the end of September. We are approaching the previous highs. So you know that it's possible we're going to start running into some resistance. Looks like someone's jumped the gun and sold aggressively yesterday, judging by the bearish engulfing candle. So we had green, 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 as you do in a bull trend. New high. The previous high was, let me see. Can't get it now. Okay, but anyway, you can see that the red candle did just make a little new high above the previous day, and then bang, sellers came in, threw it down. We made a new low below the previous day's low. The body of the candle engulfs the previous day's body. In fact, the body even engulfs the previous day's low. So it's a real nice bearish engulfing candle. The market's been overbought through most of November, certainly over the last 2 weeks as we approach that previous high. Not the strongest argument. I would be looking for other things. I'd like to see maybe a pattern in the short term, but I think it's worth trying a short on that basis. Overbought, bearish engulfing candle, trading near the previous highs. In this kind of market, that's got to be good enough for me. So I've got a sell level at 149.60, 149.80. We're bang on it right now. I think today's high at 149.86. So far, the trade is, could be working. Now, I put some fibs and trend lines on my short-term charts just to try and figure out what to do. These aren't really relevant, though. It's too short-term. I'll take them off. But you can see we did spike up to the sell level, line 50-hour moving average, and hopefully that trade will start to work now. And also, I'm looking for a pattern here to back me up. I don't have one, but I could argue that we're getting close to something that resembles a head and shoulders back, couldn't I? If I take this, you could draw this trend line and just look at the lower neckline, like if you can call it that. I'm speculating really, but maybe there is an argument that this could be the right shoulder of a head and shoulders pattern. So a break below the neckline will be a sell signal. So in that case, look, a break below below sort of 149.40 would be enough, hopefully, to trigger further moves to the downside if I'm right about it. New Zealand dollar. There we go. Again, similar sort of idea as the New Zealand versus the US. Buying down at fib support, 100-hour moving average. Again, quite a weak argument. I would have at least like front line. Now, I think that's probably where I had my stop below. The value of that is 82.46. I had my stop in at 82.40. So that's the reason, really, just below the trend line. And as time progresses, obviously that trend line's climbing, so that's giving us more leeway. There you go. What can I say? It's only a short-term bull trend when you look at the daily chart. Oh yeah, sorry. There's a little bit more to it than that. And I did actually put that on the FX Street report today. Oops. I want to show. Where are we? That's what I want to show. Yeah, I did actually put it in on the report today, which maybe you read. The New Zealand dollar, Canadian dollar. That's the chart that I was showing you. That's actually a 4-hour chart, which shows it really nicely. Now then, we've broken above the trend line. So I'm taking this as a buy signal. Again, we chopped around. This is why breakout trades, people find them difficult. I find them difficult. You often got to have 2 or 3 bites at the apple in order to actually get the trade on. And even then, look, we had a run up. We only had 2 days of run up and we're retreating again. So anyway, that's what I'm gambling on. I don't know whether we'll get the chance. I don't want to buy it here because my stop will be too wide. 82.70, 82.50. Actually, no, I'm wrong. Sorry. I actually have decided to buy it around these fib levels and the 500-day moving average and this previous high. I'm being quite aggressive on this. I would much rather have a buy level down here for obvious reasons. 200-day moving average. That's the break point of the trend line. And I will try it again down there, but I've been a bit more aggressive and suggested along there. Now, 82.49. What's happened here? 82.49. Okay. Yeah. So far it's been a good call. The low is 82.49. My buy level is 82.70, 82.50. I've got a really tight stop below 82.40. So I've got away with it because the low is 82.49 so far. So now I need a recovery, obviously, for this trade to work. My targets I've got are, I hope you can see this, 83.00, 83.30, 83.50. If you can't see it, I think it should be showing on the screen. Sometimes these screen sharing things don't work very well. So if you want to see the chart on the FX Street page, then it's published, in my section, if you know what I mean. Okay. How are we doing for time? 20 minutes. New Zealand on a CAD. Right, that's it. We're going to move on. So, incredible strong. The bulls just don't give up, do they? So we've had a nice break above the 100-day moving average. This trend line going back to July, the 50 as well. The 100-day moving average has worked really nicely as support. Can't really argue. Look, when you look at this on a weekly chart, there's no doubt what the trend is. We've had a deep pullback. We've had a heck of a recovery. And of course, we all know that the stock market's been multi-decade bull trends. More volatile recently, of course, but so I've got a triangle there. My trend lines are probably not quite accurate enough. Oh, daily chart. So there you go. Breakout. It's bullish. And we're even trying to poke our nose above the July high, which is actually the high for the year. So 16,062 or 16,063 is the 2023 high. And we're trying to nudge above it. We closed back below it yesterday, but again, today we're trying to nudge above it. I think the bulls have got it under control. We're very overbought, but there's nothing indicating to me that this is about to turn around. I don't understand the logic of it. I think we could be heading for recession, but the markets don't care. And that's all that matters, really. It doesn't matter what I think. It's what the markets are telling me to do. And that's why, despite my feeling that I should be short, I'm not going to be. 50, 15,850, 15,830 is my buy level. We're not quite there. It's, again, quite a weak argument. I'm literally just taking previous price action to find that level, just for any excuse to try to get long in what I think is probably a break above this year's high, or should hopefully be a sustained. Well, I don't. The thing is, what people don't understand what I do, and I need you. If you want to trade, stop thinking that you need to work out the direction of the market every day. You can't do it. There's nobody on the planet can do it. Warren Buffett, George Soros, these guys don't know where the markets are going. That's not the way they trade. They look for low risk trading opportunities, and that's what I do. I look for low risk trading opportunities. I've explained my strategy. So I just want you to understand that I don't have a crystal ball. Yes, I've been doing technical analysis for 15 years. Yes, I've got a good track record. Yes, most weeks, I think most days, and certainly most weeks, we make money. We don't have losing weeks very often. I, I don't know. And even when they do, they're very small. But that's because I have a strategy that works. It's not because I know where the markets are going. Okay, yes, I think the NASDAQ might break up, but I'm more interested in actually buying at a decent support level than just getting in at any level and hoping for the best. That's not what I do. I don't. Correct. Tomorrow. I mean, I haven't the faintest idea. And I don't have an idea. Nobody has an idea. Yes, it could fall. It could reject the 2009, 2010 high, and it could go down, or it could break above it and go up. If it turns around and goes down, it may only get as far as 1988, 1985. It might just hover and go sideways. I haven't got a clue. I'm not going to pretend that I know where markets go day to day, week to week, month to month. I just don't. Which direction the market is going to go in, I'm only going to be guessing. And I could be right and I could be wrong. And that isn't what trading's about. It's not about guessing. I hope you understand that. It's about, low risk trades where you have an edge. You don't have an edge if you think, oh, that might go up, so I'll just buy it, and see what happens. Don't really know where I'm going to stop. Most people that do that, they only end up stopping out of a position when they can't take the pain anymore. And they don't really know where they're going to take a profit because they don't, there's no plan. There's no pattern. There's no reason behind the trade. If you buy it now and if it jumps above 2010, well, where are you going to get out? Because you've got to have a stop loss that's relative to your target. Do you know what I mean? You've got to be risking 1 to make 2, for example. So if I'm buying it here, my stop loss probably would have to be below 1960. Well, that's not really worth trading, because even if we break up, I'm probably not going to get more than 2060 out of the trade. So why would I put a trade on that's risking 1 to 1? Doesn't it? Okay, so yeah, I haven't got a clue. I'm afraid about direction, and that's not something I'd even want to guess. Those kind of trades don't appeal to me. I've got with potential head and shoulders patterns on. One GBPJPY. This is in a nice bull trend actually, and we did bounce off a fib level, but there we go. Right now, going to find these head and shoulders patterns before we end the day. I can't remember which ones they were, so I'm going to have to flick through a few markets. I mean, by flicking through these markets, you can just see how much sideways stuff is going on. I mean, what do you make of that? Yes, in the longer term bull trend, but look, since April, we've really just gone nowhere. We're actually trading around the April high. So again, you're after me. By December end, I mean, I haven't possibly know what's going to happen in the December. I'm sorry, I haven't the faintest idea, and I'm not prepared to just guess and then have you trade on one of my guesses and lose money. So sorry about that. Right. Okay. There we go. There's one of them. Now, I put this label on a while ago. That was before we did this big jump up. But, it still could be. It's a rather elongated head and shoulders. But it's something I'm watching anyway, the CAD yen. Again, another horrible sideways market. How do you trade this? Really? It's just throwing the trend lines on and seeing if they hold. Again, okay, I wouldn't know what to do with this if you said, can you pick a trade idea? I mean, the only thing I could really suggest, probably a short around this trend line, because that trend line certainly working. That's around 109.30. But anywhere else, I wouldn't know what to do. 100-day moving average is not holding things. Found it. GBPUSD. Yeah, now this is a much nicer head and shoulders pattern that's worth paying attention to if you're looking for a longer term swing trade. So let me just back up a bit and show you what's going on. Okay, no. So the bull trend has been going since the beginning, or the September 2022. So yes, it's over a year old. Now, the head and shoulders pattern's probably a little bit big when you compare to the run up, but I'm still going to take it as a pattern. So loosely speaking, left shoulder, head, extended right shoulder, they don't have to be symmetrical. So I'm just watching this now. We're starting to settle below the 100-day moving average, even though we're in a sideways trend. So I wouldn't base the trade solely on that, but it's worth noting. We literally are, look, it's certainly lately up one day, down the next. I mean, really, really tricky. I thought this was probably a bear flag. I thought it was the start of a bear trend. I thought that was a bear flag, but it wasn't. We broke down and just traded sideways. So it really is quite difficult. So now waiting to see if we break the 200-day moving average on the downside. That is currently at around 189.00. So we're almost 100 pips away from it. I can't do anything with this at the moment. It's sit and wait situations. If this is the neckline to a head and shoulders pattern, then a break below 188.45 will be a bit of a sell signal. So that's just one to watch at the moment. Can't throw it. Okay, so I'm going to look at the S&P. Now, bull trend, a longer term bull trend, and again, good recovery. I'm struggling with it actually as far as levels go. You know, this should have been a really good support level down here at 142.00, but we overran. I don't know why we bounced. Okay, yes, it was from the 61.8% fib, but I wouldn't base a trade solely on a fib level. We got oversold on the daily chart. Maybe that was another reason to get in a bull trend, oversold in a bull trend. But it's quite random, quite erratic. Anyway, we're on a run now, so it looks like we can head up towards 46.34 as we head towards Christmas. I think the Santa rally is actually around Christmas, not leading up to it, but maybe markets will push up for the Christmas run, and maybe we can get to 46.30. I don't think we'll get much further than that, to be honest. But we're so data dependent at the moment. You know, the non-farm payroll number will be coming out. What's today? 22nd. So that will be coming out in 9 days on the, no, hang on. Let me just check. Not 9 days. It's not the first of the month. Okay. So that's handy. 1st of December, make a note, is the release of the US non-farm payroll number. Okay, so that's the unemployment number or the employment number, one of the biggest economic numbers of the month. Obviously, it's a key economic indicator, strength of the economy. So it does have some sort of bearing on future inflation. Last month, if I remember correctly, the number for October was 150,000 jobs created against an expectation of 180,000 jobs created. So the shortfall of 30,000 jobs was one of the things that convinced the market and the Fed will not continue to raise interest rates. And then, of course, we had the inflation number, which was only fractionally weak. No, I think actually that was about 0.3 weaker than expected, was it? Can't quite remember. So the market will be very, very keen on that unemployment number. So that's the first thing that we're going to be looking for after the Thanksgiving weekend, which will be obviously a slow weekend for the market. Monday, we're going to be looking forward to that non-farm payroll on the 1st of December. Until then, maybe we can push up to 46.30. I don't know. It's possible in the S&P, and then the US non-farm payroll number will decide where we go from there. Because we were looking at so many dollar pairs, but if the chart really again, I talked about how sideways this is, and it really is. Look, it's so sideways. There is no pattern for me here. Nothing at all for me to go on. Moving averages again, flatlining and converging. We had a decent break up through that trend line. It didn't come to anything. I was getting quite excited about that. I thought, finally, this is the beginning of a bull trend. But it was around the time when the weaker numbers were coming out, or weaker numbers for the US were coming out, and inflation's still falling. So that kind of weighed on the dollar as the chances of further interest rate hike. Silver for this month, I've done silver already, but I'm asking I will. Unfortunately, I have nothing to say, just to remind you. But just to answer your question, I haven't got the faintest idea. We've been going sideways for so long. It's so choppy. There is no trade. There's no trend. There's no pattern. The moving averages are useless. The Fibonacci levels are useless. So this is the weekly chart going back now to Q3 2020. You know, what can you make of that on a weekly basis? There really isn't anything. Last week, note that we had this very big bullish engulfing candle. So if it wasn't in a sideways trend, that's something I would have got excited about, but you just can't, because it doesn't really mean anything at all. This is the thing with these patterns. You've got to take them in the context of what's going on, you know, historically. You can't just say, oh, bullish engulfing candle, we're definitely going up. That's a buy signal. We've had no follow through this week at all. And I don't think it means anything, quite frankly. So, yeah, they can do. They can spring from nowhere. Look, this is a bearish engulfing candle here, and it did trigger significant moves to the downside. So I'm not saying ignore them all the time. I just find it difficult to know whether to trust it or not when you are in this sideways trend. I mean, we could easily reverse and wipe out that gain this week or next week. So yeah, sorry. I wish I could give you some direction for silver. I mean, if you think you see something, then let me know. But I definitely don't. I mean, just throwing trend lines on here won't really help me either, I don't think. Trying to find a trend line with 3 consecutive points that you could trust, even that is difficult. I mean, I guess that one, but of course it's not relevant now because we've just had all that sideways action. Okay. Thank you for the question. Yeah, I'm afraid silver and gold, looking for direction over the next few days or weeks is too much of a gamble for me. We're going to wrap it up there. I think we have got like 3 or 4 minutes to go, but I don't have any time to start. Questions. And thanks for watching. I know that FX Street will post this website afterwards in case you want to watch it again, or if you only caught half of it.